In this video, I'm talking about 3 stocks that I hope to add on the next correction or crash, stocks I've never talked about before on this channel. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things correction buys or crash buys. And what I mean is that I think it's so important to have a short list of stocks that you want to pick up or buy on any crashes or corrections so that when they do happen, you're not freaking out about which stocks to pick up. If you don't already have a list prepared and you take too long to do due diligence or stock picking, hence the quote of the day, then you might miss your opportunity. I know I have definitely missed my opportunity and seen corrections and crashes come and go before I was able to make any serious moves. So I hope this value brings some video to you. That's not right. Give me the format. First, the type of stocks covered in this video and why, and second, a list of 3 of my stocks from my own personal shortlist. Let's just jump right into it in part 1, why we're talking about these 3 stocks in this specific video. Now, I usually talk about smaller, high growth companies that are just getting started and just reaching profitability, but in this video, I'm going to be talking about more the giants in their respective industries, and they're all very, very profitable. You see, this is because a crash is usually caused by extreme fear in the market, often because of economic crises. I'm much more confident in a crisis to invest in companies that will be able to weather any situation like the one we're in right now. These stocks all have great 5-year charts, winning products, and strong financials. And lastly, these are all stocks I do not currently own, stocks that I haven't talked about before on this channel. Of course, for a crash or correction shortlist, there can be stocks on there you do own that you just want to add more to, but for the sake of fresh content on the channel, here are 3 new stocks in part 2, stocks I'm looking to add in the correction or crash. For each stock, I'm going to quickly tell you their ticker, their 5-year stock performance, an overview of what they do, their revenues and incomes, and a look at their balance sheet. So stock number 1 is Adobe, ticker symbol ADBE, up over 450% in the past 5 years. Odds are you've probably used an Adobe product at some point in your life, maybe without even knowing it. Their solutions include Adobe Creative Cloud, which is home to many names you must have heard before, like Photoshop, Premiere Pro, Illustrator, and more. They have Adobe Document Cloud, which is how millions of people open their PDFs on a daily basis, and many use it for electronic signatures and other workplace solutions. And finally, Adobe Experience Cloud, which is largely focused on business and enterprise solutions, such as marketing, advertising, commerce, and analytics. Adobe was actually one of the first big players to fully adopt the subscription business model, and their investors really didn't like that announcement because it meant in their quarterly reports their revenues would take a hit in the short term, but many people didn't see the big picture. Now, Adobe's transition to subscriptions is seen as one of the great business moves of our time, as many companies continue to follow in their footsteps. As you can see, they are revenue generating beasts, and that's largely because of their subscription business model. And for the remainder of this video, all these charts I show represent quarterly progress dating back to about 4 years ago. The blue is subscription revenue, red is products, and yellow is services and support. Their gross profit has stayed relatively consistent in line with their revenue growth, and net income has been a steady climb for years, with their last quarter bringing in nearly $1 billion in earnings. Looking at the balance sheet, we see $3.7 billion in cash and $1.5 billion in short-term investments. Now, personally, I count these both as part of cash on hand because short-term investments are also highly liquid. So with about $5.2 billion in cash on hand, we'll say, they have more cash than they do in total current liabilities. And here's something I want to note now because it will come up later in the video, something called deferred revenue or unearned revenue. Deferred revenue is a liability that represents a payment the company receives from products or services that are yet to be delivered or performed in the future. Personally, I think it's a rather innocuous liability when referring to SaaS businesses or software as a service businesses. When a SaaS business collects money before providing a service, it's a liability because it represents the service they owe someone else, and until you provide the service, you cannot recognize that revenue. But here's a visual presentation of what deferred revenue looks like throughout the year. As the annual subscriptions are fulfilled by December, revenue is recognized by the company, so deferred revenue, the liability, falls quickly. Since so many SaaS companies have subscription business models that use annual contracts, they often have heaps of deferred revenue which contribute to the liabilities number. but to me, it seems rather insignificant when evaluating risk and when compared to something like a debt liability. The point is, with $5.2 billion in cash and the majority of current liabilities in deferred revenue, and only $4.1 billion in long-term debt and $10.7 billion in total liabilities, I like Adobe's balance sheet a lot and business model a lot. Alright, that overview was longer than the other two we have for today. We just had to lay some groundwork, so let's move on to stock number 2, Salesforce, ticker symbol CRM, up over 220% in the past 5 years. Salesforce is the #1 customer relationship management program in the world right now, hence the ticker CRM. And they really emphasize today's mantra of putting the customer first. They help your company stay connected to every aspect of your business, from relationships between employees to marketing strategy to customer analytics and more. And another great thing about the company is that it is founder-led by Mr. Mark Benioff. Like Adobe, they are also a SaaS business using the subscription-based business model, so let's take a look at their financials. They've got a beautiful rainbow of revenue here, with the blue being revenue from their sales cloud, red from the service cloud, yellow is marketing and commerce cloud, green as the Salesforce platform, and purple is professional services, combining for over $5 billion in revenue last quarter. Now, their gross margins are great, consistent, and high enough, but operating income is a bit less efficient. Net income has been equally as inconsistent, but last quarter, they posted a whopping $2.6 billion in profit. Their balance sheet shows over $9 billion in cash on hand, again because I count marketable securities as highly liquid cash, and $14.8 billion in total current assets. That's actually enough to cover all of their current liabilities. But hold on. Remember how I told you about deferred revenues? Well, here they are again under their other name, unearned revenue. The majority of their liabilities here is actually in the form of unearned revenues, which again, don't really worry me. And they have more than enough cash to cover their outstanding debts. This is another company that I think could weather an economic storm. With such an important role in the world of business today and for the future, and fortified financials, I'd be happy to add this one on the dip. Stock number 3 is Nvidia, ticker symbol NVDA, up over 1,840% in the past 5 years alone. I always like to say that Nvidia is one of those blue chip companies that will still always provide very exciting long-term opportunity. It was originally well known for their gaming business and of course their top of the line GPUs. Then they had a spike in business due to the Bitcoin bubble as everyone tried to get their hands on those high-end processors, and now they have diversified into some very exciting fields. About 51% of their annual revenue came from gaming, 27% from data centers, 11% from graphic design and virtual reality related ventures, otherwise known as professional visualization, and then 6% came from automotive, which of course ties into autonomous driving. So obviously they have their hands in a variety of cutting edge fields that will have or already do have a significant impact on our lives. Now let's take a look at their financials. Revenue has been bouncing around in the same range for some time, but with their recent M&As like their Mellanox deal and improvements in their products, I don't see revenue losing steam anytime soon. This chart helps visualize what we just talked about in terms of their revenue breakdown, with gaming in blue, data centers in yellow, professional visualization in red, and auto in green. Purple is OEMs and IP. Here's the breakdown of their gross profit and operating income, and of course, if we take a look at their net income, we see that for the past few quarters, they've been realizing about $900 million in profits, but last quarter that fell to around $622 million. But I'm not worried at all about the long-term success of this company. The only reason why I haven't bought in before is because it's honestly kind of hard for me to wrap my head around a lot of their projects. They're constantly working on very innovative leads, and I like to invest in what I can really understand, but honestly, when you take a look at it from a bigger picture, there's no way that Nvidia doesn't play a significant role in society from here on out. And taking a look at their balance sheet, they have just under $11 billion in cash on hand, totaling to $14 billion in current assets, compared to just $2.4 billion in current liabilities. In fact, they have almost as much cash on hand as they do in total liabilities, which is amazing to see. Definitely another balance sheet that could recover from the worst of economic situations, in my personal opinion. These three stocks have performed very well over the past 5 years. They have survivable financials, and they're all very important to our lives today and in the future. So these are just 3 of the many stocks on my correction/crash shortlist. And if you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out the quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my stocks, portfolio, and all that good stuff. And And if you're watching at this point in the video, you are the real MVPs. Don't forget your peace and thank yous.